In a world of digital gold rushes and decentralized dreams, one name has risen to dominate the landscape, handling trillions of dollars in trades every year. It's an exchange so vast, so powerful, that its influence stretches from the highest echelons of global finance to the dusty streets of developing nations. This is the story of Binance, the world's largest crypto exchange. But behind the meteoric rise and the charismatic founder lies a shadow world of secrets, a maze of shell companies, and a relentless pursuit of growth that has placed it in the crosshairs of regulators worldwide. We're going to peel back the layers of this crypto empire, exploring its journey from a disruptive startup to a financial behemoth. We'll ask the tough questions. How did it get so big so fast? What are the secrets it has fought so hard to protect? And as it courts governments and promises financial inclusion, is Binance the future of global finance? Or is it something far more dangerous and unregulated? Anonymous shadow bank operating beyond the reach of any single nation. Our story begins with one man, Changpeng, Xiao, known to the world simply as CZ. A programmer who cut his teeth building high-frequency trading systems for Wall Street. CZ saw the future in the nascent world of cryptocurrency. In 2017, he launched Binance with a clear and radical vision, a global crypto exchange unbound by national borders. A truly borderless financial platform for a new digital age. His timing was impeccable. The crypto market was on the verge of an explosive bull run, and traders were flocking to find platforms that could handle the volume. Binance, with its low fees, vast array of listed coins, and a user-friendly interface, was perfectly positioned. It was more than just a marketplace. It was a casino, a trading floor, and a new frontier all rolled into one. While older exchanges fumbled with regulations and struggled with outages, Binance expanded with breathtaking speed. Launching in China before rapidly moving its servers and operations around the globe, from Japan to Malta and beyond, always staying one step ahead of regulators. The strategy was simple yet brutally effective. Dominate. Binance didn't just participate in the market. It actively sought to conquer it. As its competitors stumbled, Binance thrived. When the once mighty FTX, led by Sam Bankman-Fried, imploded in a spectacular display of fraud and mismanagement, Binance was there to absorb its user base, cementing its position as the undisputed king of crypto. It wasn't just luck, it was a pattern. One by one, rival exchanges either fell victim to hacks, regulatory crackdowns, or their own internal failures, and each time Binance grew stronger, its market share swelling. CZ cultivated an image of a visionary leader, a humble tech guru dedicated to the freedom of money. He amassed millions of loyal followers on social media, becoming a symbol of crypto's defiant, anti-establishment spirit. His message resonated with a generation disillusioned with traditional finance, promising a new system where individuals were in control. But as Binance's dominance became absolute, its internal workings remained deliberately opaque, a black box handling a significant portion of the world's crypto flow. This opacity, a key part of its initial borderless strategy, would soon attract the unwanted attention of the world's most powerful investigators. Beneath the polished veneer of a tech revolutionary, a darker picture began to emerge. Thanks to dogged investigations by global news organizations like Reuters and the Wall Street Journal, these journalists spent years piecing together a puzzle scattered across continents, using internal documents, leaked messages, and interviews with former employees to expose the hidden architecture of the Binance empire. What they found was a company that, according to their reports, had gone to extraordinary lengths to deceive regulators, particularly in the United States. A leaked 2018 document, allegedly created by a senior executive, outlined a strategic plan to set up an American entity, Binance US, to insulate the main Binance.com platform from U.S. enforcement. The idea was to distract regulators with a compliant, licensed offshoot while continuing to secretly onboard lucrative VIP American traders to the unregulated global exchange. Reuters further uncovered that for years, CZ's inner circle controlled Binance US's bank accounts, directly contradicting claims that the U.S. entity operated independently. The investigations painted a portrait of a company that actively sought to obscure its corporate structure and the origins of its funds. While publicly claiming to welcome regulation, Internal messages allegedly showed employees celebrating compliance gaps in week no. Your customer KYC checks as a competitive advantage. For years, users could trade significant sums with little more than an email address, making the platform a potential haven for illicit actors. One Reuters investigation, analyzing blockchain data, claimed that Binance had processed over $10 billion in payments for criminals and companies seeking to evade U.S. sanctions, linking it to funds from hacks, investment frauds, and illegal drug sales. Binance vehemently disputed these reports, calling them misleading and categorically denying any intent to systematically evade rules. They insisted they were committed to compliance and had invested heavily in building a robust team to fight financial crime. Yet the steady drumbeat of revelations continued, culminating in a landmark lawsuit from the U.S. Commodity Futures Trading Commission (CFTC), which accused Binance and CZ of operating an illegal exchange in a sham compliance program. The charges laid bare the company's internal struggles, citing messages where even Binance's own chief compliance officer admitted that the company was operating as an unlicensed money transmitter. The secret world CZ had built was now being exposed in court filings for the entire world to see. As scrutiny tightened in the West, Binance pivoted its strategy, turning its immense financial power into political capital in the developing world. In countries across Africa, Asia, and Latin America regions, often underserved by traditional banking, Binance presented itself not as a rogue operator, but as a partner in progress. It launched initiatives to promote blockchain education, sponsored tech hubs, and engaged directly with presidents, finance ministers, and central bankers. In places like Kazakhstan, it became an official partner in developing the local crypto industry. In Nigeria, it worked with authorities to establish a digital economic zone. In Cambodia, it signed an agreement to help develop the country's digital asset regulations. Binance's pitch was compelling. Embrace our platform, and we will help you leapfrog into the future of finance, fostering financial inclusion and attracting foreign investment. For governments eager to modernize their economies and tap into the global digital gold rush, the offer was almost too good to refuse. But this charm offensive raised a new and unsettling question. Was this a genuine effort to empower the unbanked, or a calculated move to secure friendly jurisdictions, creating regulatory safe havens as pressure mounted elsewhere? Critics saw a form of digital colonialism, where a single, private, an unaccountable entity was embedding itself into the financial nervous systems of sovereign nations. By helping to write the rules, Binance could ensure those rules favored its own business model, perpetuating its dominance under a guise of official legitimacy. The line between a private company and a state-like actor began to blur. Binance was no longer just an exchange. It was becoming a parallel financial infrastructure, one with its own rules, its own economy, and its own growing political influence. This brought the central conflict into sharp focus. Is Binance the benevolent engine of a new global financial order, empowering millions left behind by the old system? Or has its relentless, borderless ambition created a stateless shadow bank, a financial empire so vast and opaque that it operates beyond accountability, posing a systemic risk to the very global economy it seeks to rewire? The story of Binance is more than just the tale of a company. It is the story of our time. It's a clash of titans between old-world regulation and new-world technology, between national sovereignty and borderless finance. CZ, the man who started it all, eventually pleaded guilty to U.S. anti-money laundering violations, a stunning fall from grace that saw him step down as CEO and face prison time. The company paid a historic $4.3 billion fine, admitting to its compliance failures and agreeing to years of stringent government oversight. Yet Binance endures. It remains the largest crypto exchange in the world, a testament to the powerful, resilient network it built. Its journey forces us to confront the deepest questions about the future of money. In our pursuit of a decentralized utopia, what guardrails are we willing to sacrifice? Can a single private entity be trusted with the power to shape the financial destiny of nations? And as we stand at this digital crossroads, we must decide what kind of financial world we want to build. The rise and reckoning of Binance is not the end of the story. It is a critical chapter in a much larger one that is still being written, a chapter that will define the very nature of power control and trust in the 21st century.